In this video, we're going to talk about the Securities and Exchange Acts of 1933 and 1934 and how they've affected the filing requirements for public companies in the United States. So first, we have the Securities Act of 1933, and it was passed in response to the Great Depression, which began in 1929 with the crash of the stock market in the United States. And so that really panicked investors, and a lot of people pulled out of the market. They lost a lot of money. And so people's confidence in stock market was really shaken. And so Congress responded. It passed these two acts, and the first of them, the one in 1933, the Securities Act, it required all companies to issue a prospectus and all these different disclosures before they could actually issue publicly traded securities. So think about this as like today with an IPO, right? So initial public offering, a company that's not been publicly traded and they want to become publicly traded, they have to go and they have to create all these financial statements. They have to be audited. It's all part of this prospectus, and there's a lot of different disclosures to make sure that investors aren't being fleeced when they buy stock in this company, right? And that's what we call it Securities Act. What we're talking about with securities, we're talking about stock. So this is basically to protect investors when they're buying stock in publicly traded companies. Okay, now the Securities Exchange Act of 1934, basically you can kind of see these as being together, but this second act, what it did was it said, okay, look, all publicly traded companies must register with the Securities and Exchange Commission, the SEC, and provide periodic disclosures. Now, this is just kind of a general statement. Actually, some firms, it depends on how many assets they have and so forth. The disclosure requirements are different depending on the characteristics of your firm. But just as a general rule, it's an easy way to remember it. Just basically think if you're a publicly traded company, then you're going to have to register with the SEC. You're going to have to provide periodic disclosures. And what do I mean when I talk about disclosures? Well, there's several filings that you have to make as a publicly traded company. And the first, probably the most well-known, is the 10K. So the 10K is basically an annual report. And I don't know if you've invested in a company before, you get an annual report in the mail and it's got like a picture of the CEO smiling and so forth, and it's got some financial information. That's not what I'm talking about. I mean, they're related, but this is the actual filing that's made with the SEC. You can go to sec.gov and you can actually put in the ticker symbol for a publicly traded company, and you can actually find their 10K. So this is all the required disclosures, the things that the SEC is requiring for this company to be publicly traded. So that's going to be filed annually, and it's going to have to be audited by a firm that's registered with the PCAOB. The PCAOB, I'll make another video on that in the future. We'll talk more about it. But basically think of it as this. We've got firms that are these large accounting firms, probably going to be a Big Four accounting firm that's going to be doing the audit. Right, so you're going to have to file this report. All the financial statements and everything, they're all going to be audited. So it's not just like the management of the company just puts together some financial statements and says, oh, okay, here you go, SEC. Right, so this is looked over by an auditor, and then the auditor issues a statement and so forth. And we'll talk about that more in the future. But there's a lot of information in there beyond just the financial statements. Right, these documents can be like 100 to 200 to even 300 pages long, this 10K filing, because it's got a description of the firm. It'll talk about how many stores they have. They talk about who the members are of the board of directors, the chief executive officer, who is that person, and so forth. So it has all these different disclosures and so forth, a lot of information about the firm. And there's another part, it's called the MD&A, where the management discussion and analysis section, there'll be talk of what are weaknesses of or like threats to the firm, what are some risks. There'll be a lot of talk about risks. There'll be talk about the company's strategy. This is a really extensive document, this 10K, but a lot of people, they kind of focus on the financial statements. So you got the income statement, the balance sheet, and so forth. And you'd have to have like the last 2 years of balance sheets, and then like the last 3 years of the income statement. So there'll be these financial statements, and then you'll have the notes. You'll have the notes to the financial statements. All right, so there's extensive disclosures, and the 10K is far and away the most important required filing that companies file with the SEC. Now, that's filed annually, but companies also file quarterly what's called a 10Q. So the 10Q, they file it every quarter, and now it's got a lot of information. It's not as extensive as the 10K. It does have financial statements, but the financial statements do not technically have to be audited. They just have to be reviewed, right? So as long as the information in the 10Q has been reviewed by an independent firm, then the company is okay. So it's not quite as extensive as the 10K, but investors want the information. They don't want to just wait till the end of the year to be able to get these disclosures. So it's really important that on a quarterly basis, the firm is issuing its financial information and other disclosures. Now, if you go to sec.gov and you look up some company like Microsoft or Google or so forth, and you're looking at all their filings, because you can actually look, there's a part on sec.gov where it says company filings. So if you look up company filings, you put in the ticker symbol for your company, and you look at that, you'll see the 10K, you'll see the 10Q, but you might see these are forms that say 8K. And so 8K is it could be different for a firm could have multiple 8K filings, and what it is it's a filing that occurs when there's something called a material event. Okay, so a material event could be that somebody from the board of directors has stepped down, they've resigned. Could be there was a change in the control or ownership of the company. It could be that the company is filing bankruptcy. So there's some kind of material event. By material event, we just mean something important. Some kind of event that happened that an investor would think is important. And so now the company has to say, okay, we just had 3 members of the board of directors resign. We have to go and we have to disclose that with this 8K, which is going to be filed with the SEC. And then again, all of these statements, or these filings, they're not just filed with the SEC and then they go into some drawer and nobody sees them. They are publicly available. Right? The whole idea here is to increase transparency in these firms that are publicly traded, so that if you or I are wanting to buy stock in these firms, we can actually go to sec.gov and we could take a look and say, hey, I want to see what's going on with the filings. I want to see the 10K from Microsoft and take a look at their profitability and so forth.